All right. So, good morning, everyone. It is December 3rd. It's a Thursday. Christmas is coming up soon. This is the Hawkeye trading room. So, let's go through the quick disclaimers first, and then we will take a look at some charts. So, trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Now, before deciding to invest in the foreign exchange, you should carefully consider your investment objectives, your level of experience, and your risk appetite. The possibility does exist that you could sustain a loss of some or all of your initial investment. You should therefore not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Note that this is a live trading room. It's for educational purposes only. No financial advice or recommendations will be provided, and that any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results, and do not trade money that you cannot afford to lose. Before trading live, always operate with a written trade plan that identifies rules for entries, exits, targets, and risk management. With the disclaimers out of the way, I'll start sharing my screen and we will take a look at some charts together. All right, so you should be able to see my screen at this time. So let's go take a look at notifications. So NZD USD, that one's out of the chute. We already took a look at it together. So I did some analysis on the 30-minute. I'll try and blow it up a little bit as much as I can. So this is the wedge that I drew at the 30-minute level. Of course, the 15-minute level is what AIRIS is going to give us. So when we'll scroll down to the 15-minute, this is what I drew as a wedge, QEUS. Oh, it's actually not out of the chute. It's at the top. So that's good. I like this. This might work out well. So if we want to have a potential target on this one, we could look at the stick from the top to the bottom. You can have a stick here too. That would be a more conservative target. And actually, because this is such a wide wedge, I like this stick target better. So whether it breaks to the bottom or whether it breaks to the top, it has a 75% chance to get to the length of the stick. That's pretty high probability. So wherever it breaks, but you need it to break the trend line. So in order to identify, so we can stay busy, we can put an alert on the trend line and candle close. Oh, actually, sorry, I messed that one up. I wanted to put not candle close. I just wanted it to
cross.
No, only once. Okay, yeah. If you put bar close, that means it's going to close on the 15-minute, which is going to be too much of a, for my liking, it's too much of a lot. It takes too long to get into the entry. And just only once is going to, as soon as it crosses, once per bar is it's going to only alert me once the bar closes beyond that line. And then once per minute, of course. So there's a couple settings depending on how you feel. So let's go check the 5 minutes. So I'm not going to go any lower than the 5 minute. We're going to stick to that. See a couple things in the chat.
Just good mornings.
Good mornings to everyone. I forgot to say that. So here, let's see. See if we got anything special. I'm going to take it down to not putting anything fancy on the charts, just trend lines and sticks. Does that make sense? Nothing fancy at all. Trying to scale it back a little bit. bring it back to the basics. That sound like a plan, Al? I must
There you
wake
go.
up.
There we
Coffee.
go. Yeah, that sounds like a great plan.
Okay, so we'll take it down to the basics. So, is there any questions about this trend line? How I drew it? Why I was looking for these wicks? So that I kind of count as one touch. This is another touch. So there's two zones we can look at. Okay, two potential zones. It's going to be nice. You're either going to look for a bounce here, or you can look for a break here. Now I'm gonna I'm gonna be contrarian to what I just said, but we can do something fun. We can take this, the Fibbo time zone, and based on some analysis that one of my mentors has done a while back, you can a lot of the time you're gonna get a break by the time. So you take it, you put it at the beginning of the wedge, and then you stretch it all the way to the, I guess you can call it the apex or whatever you want to call it, where the two trend lines intersect each other, and then you have a 0.75 setting. So that means it's going to be 75% of the width is going to break out before then, most of the time. And because this is Kiwi US, we're looking at 5 minute. Where's our time here? So it's going to break before tomorrow. I guess that is what it is. We might get a bounce on this pitchfork line, but it's been breached a couple times, but it's not that bad. It's not that bad. You got a bounce here, a little bit of consolidation, a bounce, a little bit of consolidation where it breaks and then takes off again. While we're waiting for this to materialize, here you got a bounce. That could be interesting. This could be interesting. You see how it couldn't break through the bottom there? That's we might have a move up because the overall trend on NZD USD is up. And it's been up since quite a while. Let's put it that way. Let's see if I can show you a visual representation of what this is. A 30-minute chart. And this is NZD USD. So if we want to kind of evaluate the overall direction of NZD USD, you're looking at an uptrend pretty significantly. Significant uptrend. So I'm going to be hesitant to take a short, but if it bounces here and goes long, that could be an interesting setup. So that's pretty much as far as I'll go from a higher time frame perspective. Just waiting to see what's going to happen now. But you see that the fork that I drew, I drew it way back there, but it's still compliant on the 5-minute chart, even after all those. So just take a note that we're only looking for 7 to 10 pips, right? So this line to this line, for the sake of reference, is 10 pips. So right here, depending on what playground you want to play with, if we get a nice candle close here on the outside, we might want to take that as a long. So, Al, do you see anything on any of the? Hold on here.
One thing I noticed. Oops, am I talking? Yeah, I'm talking.
Yeah, you're fine.
One thing I noticed. Put up the RCS tool. I was laying in bed this morning thinking that one thing we don't look at a whole lot is the RCS tool. We look at what the numbers are, but we don't really always look at what the pattern that it's actually showing. And what I've just noticed on this particular pair, put it on 14. You have length of 14.
Nope.
The other
Nope. No.
14.
No. Not that. Not that 14. That 14.
14. Yeah.
Okay.
If you look at the pattern of the symbols only, as it propagates, it takes a little while sometimes.
Yeah. Well, there's a lot of calculations being involved.
Yeah. Put it on the 15-minute chart.
Okay.
And then spread it out a little bit.
That's 5, but you want 15?
15. Mm-hmm.
Okay. So let's put RCS here. Indicators, RCS. Oh, yeah, relative.
Relative currency strength.
Let me see my scripts. How about that? Volume, invite. Invite only.
Right there. The second one. The second.
Oh,
Second
yeah.
one from the bottom.
Down
There you
there. I've got too much. And we're developing some more as we find interesting things to look at. There's always room for enhancement, and if you think you ever got to where you've learned everything you can, then you're looking for trouble, because there's always more. Like one of the other coaches said that he just spent like $4,000 on another education platform, like another learning program, 10 hours long.
Okay, now spread those out a bit.
Oh yeah. All right. So
Spread your cans out.
let me see.
What I've noticed on this one is every time that the currencies cross, is showing you the direction of the move. The other thing I've noticed is that if you see we're on the blue line, which is the US dollar, you see how it's sort of flatlined for the last several hours.
Oh yeah, you're right.
So basically what that's saying is that the dollar is still weak, but it's the New Zealand pair that's actually making the moves against the dollar. The dollar's not really moving much. So like right now I'm looking at this as a pullback, as the dollar crossed back. Well, the dollar crossed back down to about an hour or so ago. It just flatlined. The New Zealand pairs pulled back, and now it's hooking back up, which makes me think that this move may not be done totally yet to the upside.
Yeah, that's interesting, because
It's just something I just noticed. I got to thinking about this and think maybe we should start looking at that a little bit closer about what the actual price action of the pair relative to each other are, and see which, because usually when you get one that's flatlining, that's usually the stable part. That's showing you which one's more stable, and the other one's showing you where the volatility is.
right. Okay, I like that.
So I just thought I think just something to file in the back of your things to think about and to observe and just see if it makes any sense over time.
For sure.
So anyway, I just wanted to point that out as just another way of looking at this, thinking outside the box, looking at the same picture, but looking at it from a different angle.
Definitely. So I think you'd be of the opinion that a bounce on this trend line or a rejection is a significant point. If it rejects and then comes back down, I would look at it coming short, and I would potentially take it within the wedge.
Yeah, and if you see those two tools crossing over, where you start seeing that the dollar starts coming off the bottom flat line to start trending and crossing, that may be where the end of the move is, and they start looking to take it short.
Yeah. So let's go back to the 5. So we're not. Let's blow that up. All right. So myself, it is just personal preference. I try to keep my scale at 5 pips because I switch time frames a lot. I always have to be moving. I'm kind of fidgety as a person, so I try to make 5 pips all the way across on all time frames. I don't like 1 minute or 1 pip scales or 2 pip scales. So let's see something. I have something that might develop here. So now I don't want to make it too messy, I guess is the right word. But I have a feeling we might be going down. We'll see. Feelings don't always work. So indicator name, last value. Let's go see the chat real quick while we're waiting for something to develop. Now, this would be a nice 1 minute wedge. So as you can see, there's no harm, no foul in drawing lower time frame wedges, because they might allow you to get a tighter entry. Because whatever's going to happen here is going to have an impact on this wedge and then an impact on this wedge. So we're just going to stack probabilities. Give you an idea of what this stick is. This stick is about 5 pips. So 5 pips. So whether it goes up 5 pips from here and breaks and then tags here, great. If it comes down and breaks here, then we might have a shot to the downside. So we're just doing it this way. From this overall perspective, if we wanted to have kind of a more conservative target, you could draw a stick here. Now this stick, you could actually put it here if you want, because this is still another valid wedge. This white line, this magenta line, you could, for argument's sake, and I'm going to make it a little bit too many lines here, but we'll deal with it. We could do it that way. It's off by a little bit. It's like 2 pips. To me, it's not really worth putting a line there. It just makes things more crowded than it should be. So now we have 2 different take profits. Surprisingly, Al, I'm going to want to bet this is, 17 pips? Okay. 17 pips on this break. And this other take profit would be 38 pips. So 17 pips, that's a significant move. So for the sake of just taking our pips and dipping, as many people like to say, we'll just stick to the more conservative target.
Yeah, right now I would see a target to the upside about 1785 would be the beginning of the target area.
1785.
Yep. Or 7085.
70.
Oh, okay,
7085.
7085. All right. Yeah.
And that's right. And actually 7087 is a red fib line. So that helps confirm
7087. All right. So that's an even more direct target. So 7087.
And you see how the on the RCS tool, see how the New Zealand is now pointing up?
Mm-hmm.
So it's got some strength to the upside. It had a pullback, and now it's got some strength to the upside. The dollar hasn't moved at all. It's just there is flatlined at the bottom.
So Al, this is why I don't like this target, the red line, is because if it's going to break this trend line, it's not going to stop there.
If it breaks that trend line, it's probably going to go all the way up to, I'm looking at, the next top would be around 70.95. Is the targets that I've got set up.
70.95.
70.95 right there. Yep.
Yeah, so that's a little bit shorter than the stick. So that's 15 pips from here. I like this target. So we're just trying to show you kind of the I don't know, just elementary, right? Trying to simplify things. The fact that this stick is bent bothers me. So let's see. We'll just adjust it a little bit. I mean, if it breaks out of here, guys, I would take my profit right here. when it gets down to here, because this is a pretty good trend line. After 2 hits is validated, it's good to go, but third hit on a trend line is solid. Then you got something that is powerful. So you're going to get either, you see a hit here, rejection. That's a really nice rejection. This is a really nice rejection. This is a really nice rejection. That's what you want. You don't want it to consolidate on your trend line. If you're consolidating on a trend line, that means your trend line is no longer valid. So we're going up. Let's check it out. I might get my charts ready.
Yeah, it may not have a whole lot of room to the upside, but we'll see what it pulls up to.
Let me take a look here.
It's actually formed a little bit of another little zone here. Had a little breakout to the top. It broke out of where the wedge alert was, came back and actually formed another wedge. What I'm seeing, and then you have that drawing out there.
Let's see. Relative, all right.
This thing has a lot of upward potential.
Yeah, it's going to eventually turn around, but I mean, I'm not trying to catch the turnaround. That you're just looking to get your butt handed to you, especially with this kind of upward pressure. I mean, even on the daily, it's straight up. On the daily chart, it's been up since beginning of November. It's all blue candles except the exception of like 5. So in the last month, every candle's been up. There was a big 1362 cross actually. This is pretty simple, so we'll do that. We'll add that to the chart. Where is the 1362 cross? Multiple moving averages. Oh, there it is. All right. So let's make sure this is set up properly. So 1, yeah, and the higher time frame. So let me set this up in colors that I prefer. Let's turn this off. So higher time frame is going to be blue. Okay, that's the 30-minute 62 is right down there. We're going to have, what's this one? Oh, 5, okay. This is the 13, got it. All right. So let's blow this up a little bit so we can see some. Now we're getting a little bit busy, okay? Little too much on the charts for my liking. This is probably as busy as I want to get it. So we got the 62 here, which means that in my book, you see how it came up. Here it's under, but here price is kind of staying on top of the 62. For momentum to shift, price needs to be under the 62. So if it comes down here and then breaks, that's going to be an awesome trade. If it stays up here and doesn't break this one, or doesn't break it significantly, then we could have something special too. It doesn't look like the moving averages are. Oh, are they? Green, yellow, purple. They are in the right order, are they?
Green, yellow. Well, you're looking, your green, yellow, purple, but it looks like your green is just about ready to cross over.
Yeah. See that rejection? That rejection invalidates my 5-minute wedge. So now we're going to draw it again. A little bit differently this time. No harm in doing that. We didn't take any trade, so we're not behind the curve. So that disappears. This disappears. That's invalid. And now we're just going to wait for something to happen. I don't like this target, so there's no point. I'm just going to get rid of that.
Al,
Yes.
when you had said that you thought the green and the yellow were about to cross, was that on the 1 minute or did you see that on the 5?
On the 1 minute, it looked like it was about to cross, but it
Yeah.
seems like it's right now. It's fighting. It's in a little bit of a channel zone. That's
Yeah.
it's fighting.
If it separates here,
Yeah, it hasn't quite crossed. It was looking. There was a nice strong move down just recently on the 1 minute, but it was rejected right at the 1 minute 62. But it's also pulling back to where I think it's going to make another run to break out at the bottom.
Okay. Yeah, no, the reason I was asking is only because sometimes when the candles are like cluttered, I look to the side and then I go by the values that, like I was looking at.
oh, over here.
Yeah.
So 76. Okay, I get it.
So, but I didn't know.
Yeah, I like
you were
looking
doing
at those to see what the actual values are. You can see how close they are to actually crossing.
Right. That's why I was just asking because
Yeah.
it was like a 7.
I mean, like right now, they're only 1 pip apart for the cross.
That looks like a good bounce, though, but I don't want to put too much weight on it because that's gonna. That's good. That's 4 pip, 5 minute candle, and we're not even halfway through the candle close yet. So whatever's gonna happen, let's see. I'm going to wait for a 5 minute candle close on the outside of the wedge and hold me to that, please, so I don't get too excited.
Okay. The one thing you see I'm looking at I'm just kind of paying attention to
Yeah, go ahead.
the RCS is I'm seeing that the dollar on the RCS tool is now coming off the flat line, made a little bit of a bump up as it's trying to cross. So right now they're pretty much both fighting for last place.
Yeah, they're super weak.
Yeah, they're both very weak to each other. And one's trying to now to say, okay, it's sort of like I'm looking at the dollar saying, okay, New Zealand, you've had your run, now it's my turn.
So we've got something interesting happening in the next 2 minutes, and it's going to be the 30-minute candle close. So generally, whatever candle is populating on the 5 minute is going to be extended a little bit. You're going to get a bigger candle. So this might be interesting. 8:30 is a good time. See if it makes a higher high. If it engulfs that red one, I know certain people that would take that trade as a long if it's an engulfing candle. Let me see what's going on here on the charts. Oh. Let's see. Instead of waiting around, what I can do is I could show you a little bit higher time frame just so you could have a visual idea of what here is the 4-hour chart, and it's like solid uptrend. Solid uptrend. So this is where we're currently sitting. And I don't trust the top of this. This is not going to work. That would be for a lower time frame. Let's do something else. So let's do little bit of pitchfork work. Don't worry if you start learning pitchforks or one of the best in the world was one of my is one of my mentors, and he makes his own pitchforks because he's that good. But this is the basis of it. So what you do is you take a swing low. So that swing low here, you go swing high, and then you go swing low. If you do this, then you're going to have an upward facing pitchfork. Your pitchfork is not valid like this. That's not right. It has to go from swing high to swing low to swing high to swing low, and then you can point it in their direction. Ooh, I kind of like this. So I don't want to make it too complicated, but I think there's going to be a little bit of validity to this. And then I'm putting a lot of lines, so just give me a minute and bear with me. Okay, so now I wanted to catch this bounce. So I'll show you what I'm looking at while we're waiting, because I just don't want to sit here idly and mess around. Maybe you'll see something that might pique your interest. So here is an interesting bounce. Okay. I don't like my keyboard. It makes way too much noise. And then you've got this interesting bounce here. Keep in mind, this is on a 4-hour chart. On a lower time frame, you're going to have, oh, actually, forget that. This is better. You see where it comes down, comes up, it breaks it, and then tags, and then comes up again. So on the lower time frame, ooh, look at that. All right, now let's go see what it looks like on the lower time frame now that I set that on a 4-hour chart, okay? Because I set it on the 4-hour chart, it's not going to be 100% down to 2 pips, but it's pretty close of ooh. Do you see those lines? They might be a little hard to see, but check this out. I set this on a 4-hour and it's within 2 pips. That would be an energy point. That's the confluence of a trend line and the pitchfork right here. Then you have a 513.62 cross and it goes up. I'll slow down a little bit though.
So how do you use that, Matt? How do you use that information now?
It gives it's an additional confirmation of where it could bounce. You see this pitchfork. You see where this line is?
Yeah.
This line is going to end up right here with the same point as the wedge. That means if it breaks here, you might have something special. And this is also a potential point of resistance as well. You see how I got my stick here? Well, yeah. Reality is right in this zone, it could bounce because it's bounced so many times at this zone. Do you see bounce, 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 bounce? Now, I can go back and keep on showing you how accurate this line is. So down, down, this line, that line, this area. Like this is as good as it gets from a potential support and resistance zone. You see it's still holding price. Here it breaks and comes up, almost tags this one to 2 pips. Keep in mind that this was drawn on a 4-hour chart, so you're going to have 2 pips of play. Mm-hmm. But you can see how it It pretty much holds price pretty nicely.
Yeah.
So that's why I wouldn't take it 2 pips on the other side of this line. I would wait for it to candle close on the outside and then take it, because this point here, this is a big deal. And this point down here, not such a big deal, but you see how the 30-minute 62 is going up. We're also looking at the other moving averages here. Let me go right here. So there's, you got a gap between these two. Actually, I'm gonna use another indicator. It's this one. Now I've got a visual representation of the moving average crosses. So it kind of makes it a little bit easier to see the distance between, because there is a relationship between the distance between the cross and the movement to the upside. All right, hold on to your seats, because I think we're going somewhere. I'm going to pull it up on another chart on another screen, but yeah. This looks good. So just for visual representation, so that we keep our eyes all in the same frame, this to here is going to be 5 pips. So we got quite a bit of room. So this line to this line is 5 pips. That line here is a 15 pip target. So if we wait until the candle closes on the outside, you still have your 7 to 10 pips. Let's see. Let's switch that to 1362, because I like that one better. You see how the cross, boom, and the cross, and then we got a gap here. As that gap widens, means momentum is going more to the upside. See, we could have something like this happen. We could have it come here, and then it breaks below, and then it comes up. It could do the same thing here. It could come up. So, and now we're sitting in our hands. So before 9 o'clock, something's going to happen. We're going to get our trade.
Which we do a lot.
Yeah. So we're going to get our trade before 9 o'clock. Something's going to happen because it can't sit in this zone. We're running out of retail space, right? It's going to happen in this area. Whatever's going to happen, it's coming. So just for the sake of accuracy, well, look at this. I messed that one up. So officially, I would move my trend line over here a little bit. 2 pips is acceptable, right? I'm not going to fight for 2 pips. That I'm going to consider a tag. It's like 1 pip away. It's actually even closer now that I adjusted my trend line a little bit. But I don't want any breaches of that trend line. This would be the 3rd hit on the trend line. And now we're tagging the top of this trend line. So we tagged it here. So it's kind of consolidating here, which means this top line is not very trustworthy, which is a good sign, right? I trust the bottom line. I don't trust the top line. See, sometimes it's going to reject and then come down, reject and go up. You don't want it to be consolidating at the top of your trend line here. That's because if it's going to reject and come down, it should make a pretty nice candle formation to identify that. You see here, wick, wick, reject, reject, wick, reject. You don't see this junk at the bottom. So this means that this is kind of the middle. This is like the middle of the pack somewhere. So we might have a nice trade. You're pretty much looking for highs and lows. And because we have the 513.62 cross here, we're looking for a high. We've got 4 more minutes until the next candle closes. All right. So we got Alexis, got Leslie, good morning. Now let's take a quick look and see what's going to happen here. Oh, and for the sake of... that's cool. Okay. Let's... This is going to end up almost at this big trend line, this 30-minute trend line that I drew within about 2 pips if it breaks to the bottom. So that's the room that we would have. That would be your trade, and this would be your trade.
And which way is it going to break?
Well, that's not up to me. If it was, well, guess who wouldn't be here right now?
It's a great answer, though, Matt. Seriously, because like it's so true, and like sometimes I think we as traders kind of forget that. Like if we're doing so much analysis and figuring it out, right, and then bottom line, you can be like so right on everything that you see, and yet it can go against you. So
Pretty
like,
much.
so what you said was just like so good. I'm sorry, I just was like, it was like
No.
that should be like a mantra that most traders should know, right?
Yeah.
We
All right. We're breaking the top, and we're tagging that trend line to the pip. So in the next 2 minutes, we're going to know what's going on.
And you see again, looking at the RCS tool, is that the New Zealand is showing the strength, the dollar is still flatlined.
Mm-hmm.
And so as you see how it's cycling back and forth, it's the New Zealand dollar that's making all the moves, not as opposed to the dollar.
Kiwi's getting strong.
Yeah.
Like it's 4 now.
It's also, you don't have a lot, again, you have enough room to get your 5 or 7 pips, but you don't have a lot of room to the upside before you can run into a major area that's going to have to break through.
Yeah. So keep in mind that when we potentially take this trade to the upside, once the 5-minute candle closes on the outside, we're going to have to evaluate if it's still worth taking the trade. Just reality, right? Because this candle could be another 5 pips. So if we have this break on the other side, we've got about 14 pips to here. So depending on the length of this next candle, it's going to be a pretty big deal. But I'm in no hurry to take this trade. I need to wait and see what's going to happen. This is a high probability trade, guys. If it breaks here, high probability trade, but I'm not going to sit in it too long. That trade is worth about 2% of your trading account if you put 2% into a 10 pip stop loss. Reality is if you enter here, your exit could be, your stop loss could be down here on the other side of the wedge. Because if it does go down there, it's done. Don't stay in it, because it can just as easily come all the way down here and take you out for 30 pips. This is 30 pips to the bottom here. So this is a great entry, but we'll see how that pans out. Now we're in between the two trend lines. So you want to talk about tight? That's 2 pips. There's 2 pips between the white one and the purple one. Both of those are significant at this point because here's your top, here's your rejection, your rejection, your rejection, crosses, it comes back down, it tags it. So we're going to see if it breaks to the upside. Here you see the gap between the 513 is increasing. For reference sake, Al, what time are we done today? Is it 10 o'clock?
10 o'clock, yeah, right around 10
Okay.
o'clock.
Just trying to get that in my head.
Yeah.
So we kind of wind down by that time.
And we'll probably take a little bit of a break around 9:15 if things are quiet, and then we'll come back again. If things are busy, we'll keep on going.
Makes sense to
Right
me.
now, I'm not seeing any new alerts coming in, so we're still good.
Yeah. So I think this will. I like the analysis that we did. Is the questions from the chat? Is there anyone that has any questions about the analysis that was made or any of the trend lines? Does everything make sense, or is there anything that kind of needs a little bit more explanation? And don't worry so much about the pitchfork part of it. I've drawn thousands of them at this point, but it's something that brings a little bit. It's just another layer to it. You don't need it. Okay.
I'm still liking this one to the upside right now.
Yes, I am.
It is having quite a little bit of a problem breaking through. It seems like it's kind of going, basically just basing sideways in a very tight range, and probably in about a, I'm going to see the range I'm looking at that it's basing in right now is, I'm showing a 10 pip range that's basically sitting in.
Oh yeah, from here to there. So if you wanted to, we know it's going to break out in the next little bit. So, but here's your.
One thing I do like about the move to the upside, you see that blue candle where it came right down, where it wicked right down to your trend line, about three candles over. Or yeah. That's so a lot of times what the market makers will do is they will just take a strong move down to take stops, start looking for stops,
and send people in a heart attack mode, right?
And then send people into the reverse mode to where they wanted to go, so that way can run it. Then they go and they run it up. So when you see those wicks like that, that's usually a good, especially when you're looking at for the breakout. It goes and you just get in, and it takes your stop out. You say, "Oh crap! It just took my stop," and then it goes in the direction that you thought in the first place. That's why you have to give it lots of room to breathe, because that's basically what happens, whether you like it or not. That's what happens with the market makers and the brokers.
Yeah. We are looking for. This might be a head fake right here, Al. So it's going to come down. We're going to get another pullback right here. So we might get a pullback and we might get a bounce on this trend line. That would almost be a fourth.
We're actually getting a little bit of a pullback as we speak. It's just coming out of the pullback. We have the moving average. I'm looking at the 1 minute chart.
Yeah, I am too on another screen.
Just basically getting the crossovers right at the crossover point, but it hasn't crossed, and now it's
here we go
to the upside. And again, we're looking at what time it is right now. We're looking at 10 minutes before the hour close. So this is the last little push before the 1 hour candle closes. The new 1 hour candle opens, which is basically your 9 o'clock candle.
And that's the money maker, at least in the last little bit. You see Kiwi is getting some strength. US is still weak. But on the other currency pairs, we did some analysis right before the session, and there's evidence of US weakness all over the place in every currency pair. There's a couple other setups that we did, but we're going to focus on this one first. And if we don't get any alerts, then we'll go over some of the other potential setups that Al and myself did this morning prior to the session. And maybe there's something there that you can put into your own. Look at that. Kiwi got some strength. We're getting ready to close on that. We just had a 10-minute candle close. That's the 8:50 hour. So guys, reality is it can't stay in this zone very long. You want to talk about a spring? Wow, this is as tight as you can get for a spring. That's that trend line that I drew, that pitchfork line. You got a trend line here, a trend line here. 1362 cross, which means from this point onwards, momentum is on the upside. This is a big scouter wick rejection, and this is a nice one. And this, it came all the way down and stopped here. That's a nice point. That's a nice point, and that's a nice point. So now we're breaking up 5-minute candle close, breaking that pitchfork line.
And just for the record, it's right now trying to break through a 2-minute blue fib line.
Okay.
This is where it's been kind of holding it, and if it can break through that, it's probably going to go up to that 70.87 mark.
Yeah.
And maybe possibly even a little bit higher than that.
We have to be very very cognizant, and the reason I'm not putting the other indicator on is because it's going to get too crowded pretty fast. See, look, there's that fake. Let's see. See how much gas is in the tank in this one, because it's got to go. It has to go. The longer it consolidates, the tighter the spring is wound. So if I do, oh, that's cool. I didn't know you could do live on Facebook. You just hit the button and say live on Facebook, live on YouTube. Anyway, whatever. It's like squirrel. Get distracted easily. So it's coming down. Let's see if it bounces on the 13 here. I'm going to push this over a little bit. I wouldn't take trades within a wedge unless there's always an if, right? So the if here is 1, 2, 3, 4. If I get a fourth bounce on a trend line, I'm in that trade. And if it is, Al, this will be a better entry, which is going to give us a better take profit. But true. If it comes down and it breaks here, guess where I'm going? I'm not taking that trade. I'm going to be looking for an entry down here, like in this zone. So we're just going to play it out one thing at a time. Because there's no hurry. Basically, we're making money, right? So,
well, we're not losing money if you're not in the trade yet, which is a good thing.
Right. But this is a good setup. In my books, this is a pretty good setup. We've got a tight zone here. We've got something's going to happen in the next little bit. Here it's a rejection, so this is going to be a 15-minute candle rejection. That's a good sign. And I think I might like it short. But let's see. I'm not pinning myself to one thing yet.
What's interesting, even when we had the wedge alert and where we had the break of the downtrend, that it was because it was a descending wedge. When you had the break, it still hasn't gone even 7 pips, or just barely 7 pips from the absolute break of it to where it went up to the high and then it came down and retested the descending trend line. So it's still kind of in a very tight range, which is really not really quite tradable yet.
Nope. But that might be the head fake that'll catch a lot of people.
Exactly.
So was the break to the downside, Al, or was it to the upside?
Well, the break was to the upside, but I think that was more of the head fake / the trap, between what I would draw the A and the C line of the alert. And so we're pretty much right in that trap area still right now. It hasn't broken through.
And it's consolidating.
And it's consolidated in that
which
area.
We don't want. You don't want to be in a trade and it starts consolidating and getting stuck in traffic. So eastbound traffic, which is basically a box. This is what one of my trading buddies calls.
That's pretty much what I'm talking about. And actually,
that's trouble.
I take that box back all the way over to where where your white line, all the way to the left. There you go.
You mean over there?
Not that far. Just to what that top white line. To keep going more. It's no way to right there. That where your trend line is. It's top.
Yeah. You mean there? No.
There you go.
I want to see something. I don't do a lot of potential support and resistance stuff because I don't. It's just not the way I trade generally, but I just want to see what. Well, that's interesting, huh? What's over here? What's over here? Nothing. Okay.
You have to go all the way back to May to find anything.
Yeah, I'm not doing that. So, whatever happens here, if it breaks, like we're going. If it breaks that too, but it's fighting here, and then it's obvious why we're fighting here right at this point.
You have a higher time frame that says let's go long. You have a lower time frame that says let's go short, and it just keeps on cycling back and forth until one of them runs out of steam.
Yeah. So whatever's going to happen is going to happen soon. We just have to wait and watch it play out. All right. That's either the pullback or the reversal.
And you have a little bit of a divergence right now. If you look on your 5-minute chart, even with your RSIs, you have divergence right now with that last little pop on that blue candle, 4 candles back.
Yeah.
That's your divergence candle from the candle pivot high right around the 7:35 time frame candle.
I've been looking at fractals more often now. I don't do a lot of work with fractals, but they're interesting. So it's usually a 5 pattern reversal, 5 candles, and then reverses. So you got this candle up, and then this candle down, down. So it's kind of like a triangle, like a little house is what you're looking for. Or you're looking for something like this. Like 5 candles that kind of make a little something like that. So that's what they call that fractals. And some people do very well with it. So like there's a fractal here. And one of the I got that from one of the guys that developed developer of what is it? Arrow or bags. So start looking at fractals. I said, well, I don't really know much about it. So I whipped out Google and I started reading about it, and it took like 5 minutes for me to understand what a fractal was. That's what's interesting about Google and information nowadays. So it's a double-edged sword because there's a lot of junk online and there's a lot of really good stuff, but you need to know how to get through that. Here's that move down. So let's see. gonna get rid of that. That just bugs me. I still know about where that box is. Oh, this makes... Here, I'm going to throw something out there. It might work, it might not. Okay. So, bounce, 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 break. I think... I think I'm wrong. All right, great. If that's all it takes is me to say what I think and then market starts moving, then maybe I should keep on talking. My goodness. It's like
watching paint dry.
Oh, it's brutal. I need to do something else while while I'm trading, or else I'm gonna go crazy. I just have to keep in my mind that what we're doing here is we're actually making money. We're making money in a market where most people lose money. You know, we got to keep that in perspective, is that the vast majority of people can't do what we're doing right now. All right.
Starting to break out. It's right at 2 minutes after 9 o'clock. So the 9 o'clock candle just closed. And
Yep,
now we're
I'm
open,
taking it.
Now we're
I
on
think.
a new
Don't take it yet, Matt. You said that
Oh,
accountable. You got 2.5 minutes. Let it close.
You
Oh,
pain in the
Ava.
butt. You pain in the butt.
I'm keeping you honest.
I know. Thank you. I was excited. I was like, all right, we're moving. Yeah, you may have saved me from a potential stop out. We'll see. Whatever's going to happen. Because it came up there and it just stopped. So we'll see. We got another 2 minutes. So that 2 minutes, the range that this has been moving is so low that it doesn't matter to take a 5-minute candle close. Oh. Let's see. That's why it's nice to trade with people. They keep you honest.
Yep. You asked, you received.
Yeah.
Just think
Oh,
about
God.
I'm saving. Just think of all the angst I'm saving you right now that you don't have to look at this drawdown.
Yeah. What's this guy talking about? Come on. All right, 28 seconds. I got a couple monitors, so on my other monitor, I'm watching it on the 1 minute, but I don't like doing that anymore. It's not good for me. I get too antsy.
Okay, you ready to go, Matt?
No, it's not outside.
The 5-minute candle closed.
It doesn't matter. It's not outside of this trend line.
I
The
thought you
30-minute
wanted
trend
to-
line.
Oh, you're going on the purple trend line. I'm sorry. I thought you were doing the close of the white one.
No,
Oh, you got confused. See?
it's okay. It's not enough though.
You keep me honest.
Well, because what's going to happen here is whatever's going to happen, it's going to be a big move. I'm anticipating a really big move, and I don't want to be in it 2 pips early. I'd rather give up 2 pips and have a better confirmation. Now we're getting somewhere, and I think this is it here. Yeah. That's good. I'm happy with that.
All right.
So I'm in there.
Go for it.
I'm in there, and my stop loss is going to be right here, 107.72. And if it doesn't go where it's going to go, then whatever. So 107.72 stop loss. It's a little bit bigger than I need, but it's 10 pips. Take profit. We're looking at Al's line here, 70.94. If you're
The first one was 70.87 was the first one.
Yeah, I don't want that one. What is it? 70. Oh, 70.48. I like this. 70.94. Yeah, you're right. $70.94. So that's 12 pips. And we're off to the races. Let's go. I hope you're in there. If you're not, it's kind of too late to enter. That's why I like the 5 minute. I'm really enjoying that.
Yeah, it's a good time frame. I like it. It's
Yeah.
not as boring as the 15, but it's not as crazy as the 1.
Yeah, no, it helps with my anxiety. Watching the 1 minute, oh my goodness, it screws me up big time. That's a winner, guys.
Yep.
And that is the game. Hold on, you're gonna hear my little guy in a minute. I'm gonna turn it down a little bit. Hold on. Okay.
So did you hit your profit? Your take
No.
profit?
No,
No.
my take profit's at 70.94.
Oh, okay.
But as you can see, this is the run, right?
And mine's
It's
1 pip below 87.
87, yeah.
It just
I
bounced right
don't-
off of 85.
Because I don't see this coming back down until it hits another area, because it sliced through this 30-minute, and that's a dominant candle.
And this could keep on going up quite a bit still.
Certainly. But I'm satisfied where I'm at, so I'll let you know when I exit the trade.
Remember, don't go and don't lose a 6 pip gain for a 0.2 of a pip.
No, exactly. And that's why I don't, not to interrupt, but I don't set it and forget it. I don't like that concept. I won't, if I don't have time to monitor the trade, I won't take the trade. Like the worst thing is, oh, okay, well, maybe you just take profit and stop loss and go to sleep. I don't trade that way. No problem with certain people that can do it. I like to go to bed knowing that everything is the way that I left it.
The only time I do that is if I'm doing with an EEA where like the bags indicator, I'll do
Yes.
that with it. I'll set that one, do that and set and forget.
Yes, I would agree.
But for the manual trading that's not being monitored or has a algorithm that would do strictly technical analysis, I do the same thing. I don't keep open trades open and go to bed. And frankly, I usually don't take trades after about 4:30 in the afternoon is about the last I take any trades.
Oh yeah, no, I've got strict. I try to be as strict as possible for time frames. 80% of all Forex trades, the volume is actually from London to end of New York, but after 12 o'clock it gets slow. Is that point of resistance you said there was there, Al,
Yeah,
at
but I'm going to
86?
close out my trade, and then if it gives me a chance, I'll maybe take another one, get back in it. But right now, that's I'm happy with that one.
Okay, yeah, because I had it.
This,
I had something
came right
flip
off
on
of
me,
a
so
came right off of a 2-minute blue line, which is a supported resistance line, and it came right up to that and couldn't cross over. So I thought, if it pulls back, it may give me another opportunity to go in. But I got my 6 pips out of it, and I'm happy with that.
for sure. So let's see.
So it came right up into a what I call a supply zone. It was actually a daily / weekly supply zone all the way back in May. And that's prices have memory, and it doesn't. And they don't forget even months back. When it starts going up, you know that's where that point was where it retested it, and there's no point. And it was kind of a marginal one just to get up there in the first place, but it did give us that five pip move, and it could go up a lot higher too. The zone is actually fairly wide that I'm looking at. I'm looking at from 70.96 to basically the whole zone that I'm looking at is about 10 pip zone. It just came right up into the bottom of it. So it could penetrate up a little bit higher still. It still has some.
I think so.
I've
yeah, look at the Kiwi is 7 as strength right now.
And if you're looking at your 5-minute chart, as you can see, we had that strong blue candle, nice little red candle. Now that could be a base rally where that red candle may close red and then come back and you get a blue candle to continue the trend on up to make that the rest of the stick. But it's going to have to break through that 70.87 line before it's going to go up and retest the 71, the 0.71 area.
Yeah.
And actually 70.94 would be the next point of
how many?
1, 2, 3, 4, 5, 6, 7, 8, 9, 10.
10 what?
and remember, we are on a recorded line.
Oh, yes. He was counting the pips. I showed him the 2 numbers, and he was counting the how many pips has gone. I'll get him trading before he's even in school. It's just exposure.
Yep.
I mean,
It's
if they can learn,
language.
if they can learn languages, you know, and if they can learn, like their development is just so amazing at how fast they can learn stuff, and how efficiently they can learn stuff is just beyond my level of comprehension. Yeah, he's only 3.5.
No, it's like you said, it's like languages. I mean, it's if you're talking it a lot and he's seeing it a lot, it's just absorbing in a different language. You know,
Yeah,
this is just visual as well as auditory.
yeah. The first things he said when started showing him charts and stuff was, "Oh, it's rolling down the hill," because it looks like it's up and down and up and down. So, I think the first time he said Pip was at 2 years old. It was great.
Leslie
now-
stated so far so good.
Yeah, right now this thing's pulled back about 4 pips.
And that's fine for me because we had an idea that it was gonna fight where it's at. Come on, man. Why are people pitching me on Forex? Do they not have any idea? Anyway, sorry. Facebook. Gotta love it when someone sends you a message and says, in the last couple years, how much how much money did you make in your bank account?
Are they from Auvoria
Um,
Pond?
no, from another company. Actually, hey, you know what? Screw that. I'll send you a screenshot. Maybe that'll there. That'll close your mouth. I don't think he has any sweet clue. And I think we might go up there, Al.
Yep, that was a four pip pullback, and now it's starting to go back up. I did jump back in again.
Oh, you did? Okay, good job. I think it looks good, but we'll see. As I'm sitting here watching that, I'm just waiting for his reply. I sent him a screenshot of my charts. Oh. Here, let me I'll send them screenshot of my 8 charts on one.
And you can see on that 5-minute chart, you have that strong blue candle, you have the red candle, and it closed out red, but it's a very short one. And now you've got a blue candle right next to it. And as it breaks up to the top of that, it should be breaking up and start heading towards the top of the stick that Matt drew there.
And then if you look back on the RCSs, how the blue has now angled downward.
Yep, the sort of came back and consolidated right near the breakout. And now it's starting to spread out again.
Mm-hmm.
It could still be a little bit more of a pullback still coming.
Yeah, there's so many people out there that want you to join the companies and all this kind of stuff, but when you ask them if they actually trade, they don't. Like they actually don't trade. All they do is recruit people. And then you show them a chart and they get all confused. So let's just watch this play out here. Just one of my pet peeves. People trying to invite complete strangers into an opportunity without knowing if it's what's best for them. I've got another chart on the other side that I'm monitoring as well, so it might be a little boring unless you have something you want to show. I'm just waiting on this.
Yeah, I'm just sort of watching on this one as well. It's been kind of fun watching how this thing develops and taking our time looking to see how to manage the trade and how to try and get the pips that we're trying to get.
Yeah, it's forming a 1-minute wedge here. You don't really need to see it on the 1-minute chart, but you can see it on the 5. You can kind Got a one little wedge there. Ooh, interesting. Let's do this. So something interesting about what you see right here and why I put that trend line here is this is going to be pass, and then it could come back and check here on this trend line, and that would be a beautiful entry for a long.
Well, and the other thing I'm looking at too, Matt, is if you look at the Fibonacci retracement, it's right now it's retracing right at the 50, 45, almost to 50% of the move up.
From this
move up, yep. And if you look at your potential target with that retracement, you could be looking at somewhere right around the your target of 90, 91 to 89.
Oh, 91 to 89, like here?
Yep.
You know what? I'd be satisfied with that. Because if it comes up here, depending on how high it comes, I'll take it out. I'm not going to let it come back down if there's any other indicators that, but I just see it getting a little bit of steam.
And most of the time you see these, when you look at that strong move up, and you where the breakout was all the way from the bottom, pretty much starting right around the 70, 77 area. He had, so basically went from 70, 77, came up to, broke the wedge, came back up to 86, which was basically, it's about a 9-pip move. Now it's pulling back about 50% of that, and now it's making it run up for probably the 90, 91 area. Or 70, 91 area.
Yeah, it looks like a big rally. Oh my goodness, I'm on the 5-minute chart. I thought I was on the 1. Look at me.
And there's the break of the downward trend that I have off the 1-minute chart.
Mm-hmm.
Yeah. That 1 minute close just now, and that was at a. Now we have another minute before. Yeah, about another minute before the 1 5-minute candle is going to close here.
Oh yeah, no, I see that. I'll show you on the 1 minute just for reference right here. So why are you on the 5-minute? Here. So here is your downward trend line, and that's the break that Al was talking about. So once you see these wedges, it doesn't matter about the wedge, it's just the trend line that matters. At the lower time frame, trend lines are going to be your friend. So let's, oh yeah, of course, because I said I was going to stick to the 5-minute.
It's hard not to go to the 1 minute when you're used to doing so.
It is. But look at this. This is what I want you to pay attention to. Boom, 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 boom. You got a big gap. So as it gets bigger, then you have more movement to the upside, and we are out of there. So that's rally, base, rally. See, I speak your language now.
There you go.
Nah, you'd be proud.
And there's the 87 the blue 87 fib line that had just penetrated on this last little push up. And I would say it's going to bounce somewhere in between the 87 and 94, which is be right around the 70, 90, 91 area. And that is right in the middle. And that's right in the middle of our 78 to 100% extension.
Fibonacci extension. Let me mess around with the Fibonacci extension. I don't use that very often. The only Fibonacci that I messed around with. So you're going from that bottom. Is that the
Yeah, it's the right around the 70, 77 area.
okay? Hold on. And then, oh, I'm not used to this one. Look at me, look like a goof.
You want me to show my screen? Show my chart?
Yeah, because I do it backwards. I just use the Fibbo retracement tool, and then I do then I can do the extension after. Where's the? Hold on a second.
It's got a little bit more to go to the 78. Here, I'll go and share my screen and show you what I'm looking at here.
Yeah. I'm not going to mess around with Fibbo too much. Here, I'll stop sharing.
And I will pick it up here.
Hey, we got some chat. What's going on? No, we're good.
Let's see, which one do I have there on this? Right here. Okay. There, everybody should see my screen.
Yep, we can see.
And so what we did was here's where we had the low divergence. It did break out. Here's where the first breakout was. So I'm going to take it right off of this red candle here, take it up to the top, bring it back down to right. So this yellow line is right to the bottom of this retracement. And as this is the slope that Matt was talking about for the high. Here's a little slope, which I can use this little tool for that. And here's my targets for the 78 to 100 target. So this is my target zone. When it gets up there, I'll be out of the trade again. This is the target. And then I usually oftentimes what I'll do is I'll make that and I'll just bring it down about halfway, which is right where it's at right now, and say thank you very much, and I'm out of my trade. So I took the trade. I got off right up here at the first blue line, the blue fib line, which is right here. Got the pullback. I drew my little box to see how much it was going to pull back. It pulled back at least 4 pips. When I was looking at 4 pips, I was looking for the moving averages to be crossing, then break the trend line. Got back in, and here we go again. And it could very well come up to the 100% retracement, which basically means that from where this yellow line right here at the where it says 70.82, where it comes from that line, that was the pullback. It started here, went up. This was the first leg, came back down, pulled back to the about 50% pullback of this first range. And then once it pulled back from here, you have a 1-to-1 from here to here, and you draw your stick from. So basically, the range is from. If I can pull this up,
It's really stalled out where it is right now. So I guess your exit was potentially on point, but I'm still staying in it because of the 513.62 cross that I had. There's a lot of momentum.
Yeah. See, what I'm looking at here is like here's the bottom of the move, here's the top of the move before the pullback. So I draw my little stick here, then you come down where the pullback was, which is right here, and then up here would be your target. That's your 1-to-1 target. And what I do is I take the 1-to-1 target, I go to the 78%, and I split the difference just so I can make sure that I don't get lose that range because I couldn't get the spread in there. Because you see, this is only you only have a 2 pip spread between the 100 and the 78. That's pretty much what your spread is right here. And up here, this zone, right up here, this red zone, this is the zone I found all the way back, I think it was back in May, where I found this zone. There was nothing, absolutely nothing on the charts that told me it was going to go any higher. If I had to go all the way back to, let me go to see, it's on a weekly chart. I found my daily. And you can, the market's just now, is this, yep, market just opened up. But there was some wicks here, but the price was all the way up here around the 70, 72 area. So we knew we were up in this area, and this was the wicks. This was all the way back on a daily chart, way back in April
2018
of 2018. 215, which is 2 years
Yes.
ago. So this is making a
Yes.
2-year high. So here's a nice drop, pull back. Here's some wicks, pull back, came back, never tested this area, but it did break this on as we're speaking right now. And it's price as memory. So here's
Yeah.
where it broke. So we were in somewhere in this zone right here. Come over here and see this is how high as it got before. I'm going to draw my supply line, my line over by support. So we're looking 2 years ago. It was ever up this high until 2 years ago. Go back to our chart, and you'll see that this is where the break was. This was as high as it was before, and then this is a new area right there. And I'll go back to my 5-minute chart, which is probably where I was in the first place. And that's where I drew this double lines. This is where I drew the supply zone, and this is where it is right. And it's coming right into that area.
So
Now,
our
it could still go higher, but right now it's got to get through this.
yeah. So our what do you call it? The RCS tool there is giving us a lot of strength on the QE. And the trend overall for US was US weakness. So
And that was your trade of the day.
pretty much, my friend. That's as good as she gets for now, I think. I'm still holding on to mine for a little bit. I've got 70.94 is still the target. 513.62 has given a little bit more room, so I'm gonna switch out one of my screens here. I'm gonna hide your screen for a sec.
Okay, here I'll stop sharing. You want me to stop sharing? And actually, right now it's 9:30, so we have the U.S. market is now open, and so the dollar is going to probably start taking over some strength here. Now we're back awake, and so this could be the end of this move for right now. I'm happy not to take any more. I'm good with that one. Looks like stocks are opening up higher. Am I still sharing my screen? Or did I stop sharing? Can anybody see
You're
my
still
charts?
sharing. You're still
Okay,
sharing.
I
Yeah.
wasn't sure if my charts were.
Oh, sorry, I was talking and I was muted. So that means you didn't hear what I was saying. I was saying
That'd be correct.
I hid your screen, so that's why I thought you weren't sharing. Look at that. We're going down. Surprise. Exactly like you said. But I think we're going to get that's just the pullback to the move up. We'll see. Elias has gone in the other room because I was talking too much, so that's good. He'll you won't hear him. And I'm looking for a hook back right here on the trend line, on the 30-minute trend line that we drew early. It came back down, and we'll see if it tags it. If it breaks through there and closes on the other side with like 2 or 3 pips, I'm going to close my trade. And I'll be out in the slush. Not too bad. I could have got my 5 pips, but I still believe it's going to continue going up higher. This is really like watching paint dry.
Mm-hmm.
So back into the wedge. Like to give it another 2 pips, and then we'll see what happens.
I know we don't give much weight to news, but I was just checking out Forex Factory, and the U.S. unemployment claims were
Yeah.
at 8:30 this morning, and they actually were 50,000 better than what they the actual than what was forecasted.
All right. So that's
So,
why it's going the direction that it is.
mhm,
That would make sense.
Yeah.
I didn't know that that was. Oh, right. Because it's the pre NFP thing, right?
yes,
Yeah.
yeah, and OPEC is meeting all
Oh, okay.
That's
Yeah,
all day today.
we totally didn't even check the news events or nothing.
Yeah, let's check them right here. We'll see what this is. Thursday, December 3rd, all day OPEC. 9:45. Nothing other than that. All it was just basically an all-day OPEC thing. So that's not much you can do about that other than just trade what you see.
Yeah, the 8:30 Al.
Yeah,
The
there's
Forex Factory.
8:30
Yeah,
is
U.S.
unemployment
unemployment.
claims.
Okay,
unemployment.
they were better than expected.
Oh, I see.
Yeah. That would be one of the big movers.
That's why it's not a red folder.
Yeah,
It should be.
It's orange, but that's about it.
Oh, okay. That's odd. Oh well, they know better. Anything to do with unemployment, I generally regard as a red folder because that's such a foundational cornerstone of a company, of not a company, but a country's financial
economy. Yeah,
situation.
for sure.
Market makers like to use that as their justification. Hey Al, if it does
Yes.
not come back up there, then that means this is the end of this run for a while.
I would say that could be.
So if it doesn't, if that top there, if it can't get back up there, then we're done. It's the momentum shifted to the downside. Just watching a couple things here.
It looks like gold's starting to tank, or has started tanking. This is a little bit stronger pullback. Came right back into where this whole thing started in the first place. And this whole move is basically from the breakout to where we had this divergence here, where it broke out up to the top of the high, which was right about here. That was basically 10 pips. Now it's coming back to take another shot at it, looks like.
Yeah,
Got a
and
nice pullback.
I think if it fails to come back up there, like we said, that is going to be the bottom of this whole. The top of this entire run for the last couple weeks, actually, since like the beginning of the month. This could be the turnaround point, but I don't want to call tops and bottoms. That's ridiculous. I'm not good enough for that.
Every time I think we're at a top, I usually end up wishing I hadn't called it.
Right. You know,
you keep thinking, oh, it's as high as it's going to go, and it keeps on going higher and higher and higher.
Right. But recently, Al, I've been coming into the opposite side. So maybe that's a good sign, is that I'm calling a top and I'm calling a continuation and it's actually the top, and then it reverses against me. So whatever I'm doing, I'm identifying it, I guess, but not as effectively as I would like.
Now I would say this: if this thing comes up, see if I can draw this. Let's say this level right here. If it comes up and it can't break the top of this, this could be a nice start of the first move. This could be the leg one, leg two. If it doesn't break the top of this, where this candle is right here, if it comes up and can't break through this area, then this could be the beginning of the big down move. If it breaks, then it's just a continuation. You can see it's been trending all the way from over here from the overnight low earlier this morning. It's basically been trending higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And now it's question. Now it's going to see if it's going to retest this. And if it can't break through this one, that means this is the top of where we had all the way back in April of 2018. That this would be just another retest of that whole area, and then we could be looking at a nice little down move from here.
You know what? Every time I've seen like these really big levels, you know, like they go back and they say, oh yeah, well, it's going to reverse here, reverse here. I see it smoking through there, especially in the last couple months. Any of these major zones where it's been in the past, especially with the economic situation in the US and Canada and all across the world, it's a record-setting year in multiple ways. Now we're back at that top. So here we go, Al. What are we going to do?
I'm going to stay out of it myself.
Yeah, I'm still in. It never took me out. I'm sticking to my guns. The fact that it's still gonna continue to the upside. I just saw too much momentum with the 1362 and like I'm fine putting my stop loss on the 5-minute 62 and just moving it until it hits my target. Or if it doesn't, then I'll be completely fine with it not hitting my target.
Mm-hmm. So really, right now, it's only been 7 pips since it broke out. It broke out at right around 70.81, and we're just now coming up on 10 pips.
Yeah. This is going to be my exit. Watch me exit, and then it breaks to the upside.
But you left a little bit for the next guy.
Yeah. Hold on. I just need one more confirmation for me to exit.
Gold is tanking very nicely. Not that
Yeah, you making money on that, are you?
Well, the bags had a sell on it.
Oh, well now. I'll tell you what, I don't talk about a lot of other things very often, but I am enjoying that new indicator arrow. I'll tell you that I took a trade and I was in it for all of 7 minutes and made 75 pips. And there's no BS to that. That is factual. And I did 20 seconds of analysis. So it's been very interesting to see. So I do the wedges. I'm starting to look into bags more. Just adding a couple more tools to the arsenal.
That's what you do.
If there's more, like yesterday, I don't think it gave very many alerts during the what they call the money zone, where 80% of all Forex transactions happen. There wasn't a whole lot. There's still more room. It's got a pretty big gap here. What's my take profit? Did I put a solid one in there? Yeah. 70, 72, no, 92.
And I'll put those fib zones back on here again. You see right here, here's the green fib line, here's the red line, here's the blue line. So I got out the blue line on this first pushback, got back in over here, got back out at the break of the blue line right up to the red line. And now it's going to break through the red line and see if it can go up to the green. And up here's the next blue line just above the, here's the next red line. So I would not expect to see it. If it can break through this zone, then it's probably going to come on up to this area, the 7108 area. Here's 71 right there. So this is a fairly good size set 2 minute. Let's see where we have with the higher time frames here. Here's the blue 15-minute blue line right up in this one. So here's 15-minute blue. And here's the, let's see where the others are here.
Oh, I was on mute the whole time. I was, these mute buttons sometimes.
Here's a 15-minute red, which is kind of right where it came out. So right now it looks like it's going to be trading between this blue, the red line and the blue line. And so that overall move from here, from where the B is, could take it down here. This is a 63 pip move, which is what started out overnight last night. It couldn't break this one. And now looks like it may be heading on up to the 7108 area possibly. But if I do a zone on this, we're looking at, let me do it this way. Here's the red. Here's the bottom, and here's the bottom third. Here's the middle third, which is where it was basing, and now it's coming up to retest this area right up in here. If I break this down into thirds, I would say you'd be right at 7,100. And you're looking to get now just a little bit before that, I believe. So it's breaking through this zone. Now mark the 15-minute red. And then we should have some points in between on the 5-minute. And here's the green, the red, and then back to the blue again. And this could be your target right here. This is a nice little zone right here. It was between your 15-minute blue line and your 2-minute. That would be a price point to be looking at. And that puts you right at 7,100. And on that note, we're just about done with the session for the day here, Brett and Matt.
Yes, sir.
We'll see if you can get your target here before we go.
Oh no, I exited the trade already.
you're
I think
out,
my
okay.
yeah, I exited early, I guess. I exited right before that run up. So I saw something and I should have just stuck to the 5-minute and stay away from the 1-minute chart. 1-minute chart gave me something else and I got a little bit antsy. I didn't want to turn a losing trade into a winning trade, a winning trade into a losing trade.
That is the key. Don't get greedy and trade your plan.
Yeah, this would have been a very nice move. We would have been already up about 20 pips, but would have, could have, wish, doesn't matter. It's whatever you're.
Like I said, all you need is 5 pips a day, once a day, to get your $1 million on a $5,000 account at 2% risk.
Mm-hmm. Absolutely.
Takes you about 1.5 years or 2 years to do that, but that's pretty good profit return. Just get your 5 pips a day.
Yeah.
The power of
it's a big
compounding.
deal. It's a big deal. Compounding is.
And this was the 5 pip. This was pretty much from the time we had the breakout, and we had the wedge way over here. It faked us out a little bit. It just kept on, hanging in there. But once it finally broke, which is right around 9 o'clock hour, which we often talk about, and to where it is right now, that's a 20 pip move. All you need to do is get 5 pips of that. And I was able to get in. I got 5 pips, got back out, got another 5 pips. And so I got half of that move, but I did get it all down in this area right here. I was concerned about this zone right here, but that's gone. So it doesn't have to worry about that one anymore.
Yeah.
Mm-hmm.
And I went right through that.
And so
it went straight through there.
It blew right through that.
And that's almost, what reality is every support and resistance is generally going to be called potential support and resistance, right?
Yep.
It's not a, like, we thought that it was going to hesitate where it was at, and it just blew right through there.
Right.
Like I said, looking all the way over here where, now we know where this thing went. Let me just take all this stuff off this chart. You can see where these, where the prices are. Take my moving averages off here. So you can see where the price is. I mean, it really does have the potential going all the way up here. This was back in July of 2017.
Yeah.
Here's February of 18. Here's April of 18. So we're on, I mean, on a weekly chart right now. But you're looking at it's breaking. It broke through this area. This is a little bit of a. You got this strong drop over here. This was an area right here of concern on a weekly chart.
Mhm.
This is how it came low up here. So this is right where it's at right now. I mean, it still has potential. It could go all the way up here to 75, which is another 300 pips, 400 pips away. And it is on a strong up move. If it's breaking these levels now, and you're looking back in 18, so we're looking at a couple years back. That's just saying what the dollar strength is looking, what the dollar is looking at over, based on the economic moves of our country and the currencies as a whole. This would be the next zone that you'd be looking at. So I'd be marking this area as the potential.
Overall, it was a really good morning, I think.
It was a good morning. Yep. You did a good job, Matt.
Oh, thank you.
Yeah, good job, Matt.
So, but here's the next here's the next area of basing. This was on a weekly base. So you can see like for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 12 weeks. It basically a whole year right here. Or no, 12 weeks, but 3 months. 3 months of basing. And then it started trending. It came back, it based again. Well, this is the area where it just broke this basing right in this area. If you look at the consolidation, and this is going back a long way, and it's like it's hard to put your arms around the fact about how 5 pip targets matter based on monthly charts. But you can see where it's basing right in here. It based and it just blew right through this in the last few weeks. 1, 2, 3, 4 weeks. It just blew right through that, and it's still going up to head up to this one. So this is a strong potential area where we could be looking at. I'm just going to mark this low right here. And we'll use it and just keep looking at it forward when it comes to when we get these alerts and things. We're just going to make a note of these areas.
Al, if we have a moment after you do this, can we just look at the Aussie US?
Aussie US? Yeah, we can do that.
Just to see if sometimes
see if it's
they mimic
the same,
a little
same
bit.
thing.
Yeah, in regard to
Aussie US. So basically, let me clean this one up. And we're on the same weekly chart. And it's doing basically, it's kind of mimicking the same thing.
Mhm.
Now, it's not quite as pronounced. We don't have quite the basing that we had on the other one. But I would say we have this area right here is what we're going to be looking at.
just 2 years back.
From here. From there to, this is a little bit of a basing in here, then a drop. Actually, this was probably more basing here. But it's probably already about ready to blow through that one area. You can see it's just coming up right on the top of this. So this is where it was trending. Highs, lows, lower highs, lower lows, trending, basing. I see right in this area. You can see where the price it kind of kept. It broke, came back in there, broke, kept back into this, broke, kept back into it, and then it took off, and now it's back into this area right in here.
Yeah.
So I'd be looking at this area quite a bit before, and then this would be another level of a from this peak right here. Again, we're looking all the way back, 2.5 years ago.
Yeah. Okay.
So. Okay, well, with that, it's 10 o'clock. We're going to wrap this thing up today. Hope everybody made a little bit of money. So we were able to take that trade. And we'll see everybody tomorrow. Same
Great.
time.
Yeah, tomorrow.
Tomorrow is Open Mic Friday. So not that anybody's opening their mics, but we hopefully come back and maybe have some questions or some comments. So let us know what you think. On that note, we'll say
Thank
goodbye
you.
to everybody, and thanks. Have a good day, and be safe.
Great
Have a
job,
great day,
gentlemen.
everyone.
God
All right,
bless
thank you
everybody. Have a
guys.
good
We'll
day.
see you guys around.